Good morning, everybody. Good morning and welcome. I'm a few minutes early, so I'm going to drag my feet while people come in. Good morning, Ron. Good morning, Erla. Good to see you guys. Hope everybody's doing well today. That was some pretty good news at 8:30 a.m., wasn't it? Man, morning, Wayne. That was impressive. That was quite the spike. Made me really happy that I exited my position before news hit. The cool thing is I knew that when it was coming. Every morning before I start trading, I go to forexfactory.com/calendar. Is it moving nice, Ron? I looked at it right before I started up, and there was a 50-50 from a weak bottom with divergence, and I was like, man, that doesn't fit any rules I have. And I haven't even looked to see what happened. I don't know if it went up or down. But every morning, forexfactory.com/calendar. When are these high impact releases coming out? When are the medium impact releases coming out? And the reality is, guys, I couldn't care less. I mean, there's not a bone in my body that has any emotional attachment to the core PPI. But what I do know is that anytime I see that red box, I say to myself, hey, guess what? The market may be a little erratic. It may spike. It may jump. It may bump. It may take me out of a position. And man, if I didn't exit my position before news, it would have taken me out and slipped me probably for hundreds of dollars. So every morning, guys, make it a routine. Sip your coffee, check the news. And then everything that I talk about, and before I do this, special welcome to everybody that's brand new. I know I've got some new people in here today, some people that are maybe a week in. It's great to have you guys with me here. There are no secrets with Nexgen. There's nothing that I withhold from you that you need to be successful with the software. And to be honest with you, I'm going to give you everything that you need to be successful with the software before this day is over. My approach is one of simplicity. The way I teach is heavily dependent on the mistakes that I made as a brand new user and teaching you how to avoid them. All the answers come from the Nexgen education page, guys, the Nexgen homepage. And then when you go to education, specifically the trading guide, and this is where everything is, guys. Hey, Steve, nice to see you. And guys, I'm going to tell you, there's a lot of information on these pages. There's a lot of extra videos. There's a lot of AI-generated wording. I'm going to forego all the fancy stuff. And we're going to keep it super basic this morning. And we're going to keep it super focused. And guys, I'm going to tell you that I really do. I say the same thing every day, every morning, first hour. And there's a reason that I do it. I do it because repetition creates recognition, guys. Repetition sets the tone. It lets you know, really, the message is consistent. I'm trying to open this one up. Guys, this is day one. I'm just going to copy that image and drop it in the room. This is day one. This is day two, guys. You are drinking from a fire hose. I hope you can see that. I wish that was bigger. I'll save that picture so that we can do a bigger version. It feels like there's a lot of information coming at you in the very first day or two. It feels maybe even a little overwhelming, and I get that. I've been there. I've done that. I don't want you to think, oh my gosh, this is too much, because it's really not. Hey, good morning, Bob. But what happens, good morning, Jeffrey, is if you allow it to be simple and you allow it to be focused and you don't try to overthink it, you'll be amazed at how quickly you get to where you want to be. So I'm going to encourage everybody that's brand new, anybody that's not consistent where they want to be, people that aren't winning more than they're losing. Guys, focus on this one trade with me this morning in the first hour. Let's talk about the high probability trade. Because this is a trade when each indicator on every chart agrees with the rules for the trade. This is a trade where triggers are the strongest, where there's no termination conditions, where there's no trouble spots between you and your targets. And guys, this is the trade that when you learn the rules and you follow them, typically wins 70 to 80% of the time. And I want to remind you that the goal of trading isn't to be active, to show off, to impress your friends. The goal of trading is to make money, to make more money than you lose, guys. And anything that wins 70 to 80% of the time puts you in a position to do just that. The most important thing that focusing on this trade does for you, aside from the great win percentage, creating all that confidence, is that this is the trade that's going to teach you to read your indicators. Nexgen, we're not a day trading company. We're an indicator company. We're a software company. And we provide you with the best software on the market, especially if you're in a demo. You have a working copy of some of the best stuff out there. And what we're going to do is I'm going to teach you how to read these indicators that you have. And you're going to realize that 90% of your day, each and every day, is sitting on your hands and doing nothing, just reading your indicators, waiting for advantages. The other 10% is when you're active, when you're trading. When your indicators tell you that you have the advantages that you need to take a trade, when your pattern is present, that it has been proven to win more than it loses. So when we talk about the high probability trend trade, in my opinion, we're not really talking about trading yet. We're talking about learning to get the information from the indicators so that you can make a good decision, so that you can say to yourself, I have these advantages in place, I'm going to be a trader right now. Once you get good at reading your indicators, once you get comfortable with a couple very basic things, you're going to understand where the market is likely to continue. Initially, this is your entry for the highest probability trend trade that we teach, and it will be your entry for other trades as well as you grow with the software. You're going to understand where the market is likely to go. This is going to help you make good decisions on targets. And then finally, and I think most importantly, you'll understand where the market is likely to stop. These are what we call termination conditions. These likely to stop areas are where trends end, where the people that control the market make decisions. And you're going to understand all this stuff if you keep it really focused on this one trade in the beginning, guys. And this one trade in the beginning is only 3 rules. These are the rules for the high probability trend trade. Each rule, when true, equips you with an advantage. So your rule number 1, it says that your large chart needs strong trigger lines. When that rule is true, when it's factual, you'll have the advantage of momentum. You'll have the advantage of a market that has the potential to push in the direction of the trend, that has the ability to break key areas, that may even cover some of the mistakes that we make as new users. The second rule says termination false. Terminations are those likely to stop areas. And what it's reminding you is that you don't need to trade into an area that could stop the market. You don't have to wish that it would break or hope that it breaks or want it to break. You could simply allow it to. And there's no reason to trade into these areas that may stop the market. And when there's none present, you will have room to your profit targets. And we're going to call this the advantage of a clear path. So your core, your foundation, your base, this is momentum and clear path. And once you understand these 2 concepts, once you can look at your charts and identify the momentum and identify these termination conditions, guys, you have everything you need to create a very consistent, a very profitable trading plan. Your third rule is designed to get you into the market. It's very specific. It's so specific that we wait for the market to come to us. This is your advantage of an entry area. And that entry area advantage is where the market is likely to continue with the trend. So rule number 3 is specific to the high probability trend trade. Rule number 3 may change as you grow with the software, as you find more opportunities. But in the very beginning, guys, I can't stress this enough. Make sure that you're comfortable with identifying momentum. And we're going to break each of these rules down individually. Make sure that you're comfortable identifying a termination condition. Once you can do these 2 things, guys, it really ups the patience and it really sets you up for success. So these 3 rules, again, simplicity, it's only 2 charts. With NinjaTrader, you can build minute charts, you can build candlestick charts, you can build month charts, day charts, stock charts, future charts, option charts. You can have a million different time frames, guys. We're going to do it in two. We're going to do it in two charts because that's all it takes to identify these trades. Your large chart is a very slow moving chart. It's a broad stroke of a brush. And honestly, it's difficult to see change on the large chart because it doesn't change very quickly. We can use the most current bar, the first printing bar on this large chart, and we can use that to define the direction, the momentum, and the areas in the market that are important to us. Rules 1 and 2. The advantage of momentum through strong triggers, the advantage of a clear path through no terminations. You'll be able to identify that in one bar on the large chart. Once those rules are true, and this is an important statement, when your rules are met on the large chart, when you have the advantage of momentum and a clear path, you'll turn your attention to a smaller chart, and this is a faster chart, and this is nothing more than a refinement chart. It'll show you the inner workings of these 1 bars on the large chart, and you'll see them visually as 20 to 30 bars on this smaller, faster chart. You will literally see the market go down inside of this bar as price reduces. Very often you'll see it bounce, and that's what these tails are. That's a bounce, and then you'll watch it go right back up, 20 to 30 bars. It's this refinement process that allows you to pinpoint your best of the best entry. It's this refinement chart that's going to help you to reduce risk. It's this refinement chart that's going to help you to increase your profit potential. In rule number 3, the entry for the highest probability trend trade, it comes from this small chart. But it's important that you remember that the large chart leads the way. The large chart tells you to look for that entry because these two charts are really a representation, this is a pretty cool analogy, of who you're trading against or who you're trading with. And the large chart, I want you to think of it as a large crowd. I want you to think of it as these group of people, men and women with all the money, all the influence, all the charisma. They're great dancers. And these guys establish the trend. They create the momentum that we look for, and they react to those key areas that you're going to see on the large chart. These guys typically get their way. But there is the small crowd, and the small crowd is kind of what your small chart is. They're fighters. They're rebels. They like to go against the flow, guys, and they create these little retracements, these pushes that are against everything the big crowd wants. The great thing is that the small crowd typically fails 70 to 80% of the time. Your rule number 3 is designed to pinpoint precisely where their failure is most likely to happen, guys. And if they're failing 70 to 80% of the time, it puts us in the catbird seat. It gives us the opportunity and the potential to win up to 70 to 80% of the time on this highest probability trend trade. So we love the small crowd because they fight, and it's their fight that's going to get you to your amazing entry, guys. So there's a path. There's always been a path to get to where you want to be as soon as possible. It's 2 parts. Post in the room, use a spreadsheet. Post in the room, use a spreadsheet. I'm going to show you why. We spend the first hour learning the trigger line and the Fibonacci rules for when it's okay to trade. I break down every rule individually. We look at pictures. I'm going to give you everything that you need to study it. I'm even going to be available here in the room 15 hours every week to give you feedback on your chart reading as you learn to read your charts. Your job is to simulate and to practice and to not be afraid to jump in there and make a few mistakes. But when you simulate and when you practice and when you look at your charts and you have a question, take a picture and drop that picture into the room, because when you do that, what you've done is you've opened the door for a conversation. You've really opened the door for a private session. I'm going to look at your chart. I'm going to look at your chart read. We're going to make sure that you're reading your indicators correctly. If you show me your entries and exits, we're going to talk about how maybe you could reduce risk, how maybe your stop could have been in a better place. We'll talk about how maybe you could have gotten a little more money out of it. Or there's a chance, and it happens a lot in this room, that we're just going to virtually high five because you did it great. Post everything you do into this room and give me the opportunity to help if you need it. And then we're going to simplify. And we're going to talk about this high probability trend trade, and we're going to focus on these advantages, And your job over the next week or so is to learn these looks, to know what looks you'll commit to. It took me a while, I think, to believe this, maybe, but the high probability trend trade is a pattern that repeats itself. It's a pattern. It is nothing more than one very specific look, and your job is to learn that look, to recognize those advantages so that you're comfortable and confident taking this trade. You've got to know the looks so that they become easy, and that's the second piece of the puzzle, guys, is the spreadsheet that I'm about to drop in the room for you. This spreadsheet is given to you when you download software. This spreadsheet, the first tab is your trade journal. Even the CME, like if you go and Google, what should I do as a brand new trader? They tell you, you should have a journal. You should track your progress. You should give yourself a way to go back and study what you've done. That is exactly what this first tab is. It gives you a place to post your pictures, to talk about what kind of trade it was, to even talk about your advantages. And then the most important slot on this one, it sounds a little egotistical, is that there's a whole section dedicated to the feedback that you receive in class. So what you're going to find is we look at a picture and it may be perfect entry, never miss this setup. And you say to yourself, man, there's my pattern. This is what I want to focus on. And then there may be a little coaching on how you might have taken away a little bit of your advantage. You're going to say, okay, I'm going to focus on not doing that tomorrow. I'm going to make sure that tomorrow I give myself the best of the best. And one of the things that you'll notice is that the feedback repeats itself because everybody repeats themselves. And you'll begin to recognize the patterns that are helping you. And those are those great trades, those awesome patterns, those beautiful entries. But you're also going to recognize your thing. And your thing might be keeping you from getting where you want to be. Very often trading into termination conditions, that's a very common thing. And if you take the time to study yesterday's trades, yesterday's feedback, and you see into a termination condition 2, 3, 4 times, all you're doing is you're setting yourself up for success for the day. All you're doing is you're accelerating your path to success because now you've got this frame of mind that says, okay, be aware of those termination conditions. Ask Mark for help on termination conditions to make sure that I can stop trading into them. So this spreadsheet isn't just a journal. Go back and study it every morning. Look at what you did yesterday so that you can trade better today. The second tab are the rules for the high probability trend trade. I stress this heavily every day. Learn the rules and know what they look like. Know what they mean to you. I probably give you guys more than I should because it keeps you from doing the work, but that's okay, whatever. This is strong triggers, guys. This screen section is 50 pictures of what it means to have the advantage of momentum, exactly what it looks like, and every chart is annotated, describing the look so that you understand what it is visually and you understand what it is in a written form so that that look resonates in your brain and says, wow, this is that advantage. The red sections are what it looks like to not have your rules met, when these triggers aren't strong, but rather they're weak, when your path isn't clear, and it's one of those likely to stop areas, and then there's pictures of the entries, guys. Everything we do is repetition, and the more pictures you take, the more you talk about it, the more you study it, the more you look at it, the slower the market appears to move. The client trade section, I'm not proud of it. I steal pictures from you guys, I'm not going to lie. I steal great trend trades, great medium probability trades. I even steal some momentum trades from you guys. I take the picture and I drop it into this third section, and this becomes a study guide for my new users. Guys, there's almost 400 pictures of Nexgen users going after it with that momentum, with that clear path, with those entries. Some of them fit the rules perfectly. Some of them are a little outside the rules, but these are the client's perfect trades. Trading is an individual sport, but there is something to learn from every link in this page. There is the entry sequence for the high probability trend trade long and short from inception to completion. There's management because we got to manage these great entries. There's patterns that will jump off the page at you the more time you spend with the software. The more you begin to focus on the best of the best, you'll start to see things. And maybe this is your next trade. Maybe this is an addendum to your management plan. Maybe this is a way to pump the brakes and not take the next trade. But you're going to see these patterns. The more familiar you become with the software, the better chart reader you are, the more opportunities you're going to see. And then finally, there's building your plan. And this is where you're just going to take a lot of the pictures. So you drop a picture in the room and I say, oh my gosh, L, that is the perfect trend trade. Take that picture, put it in your trade setup looks. Pax, when you drop something in the room and I said, hey, you could have held a little longer, look at the strength. Drop it in the management. And then when we talk about things, I'm like, hey, there's this pattern that happens all the time. You just dropped it in the room. It's called the gap theory. Let's start to study that. Let's see what it means to us. And guys, the more you use the spreadsheet, the quicker you're going to get to where you want to be. The more you post in the room, the faster you're going to get to where you want to be. So my promise to you is everything you need, with the exception of experience, will be given to you today. And it's going to come at you in the easiest way I know how to do it. And that is to break down each rule individually, to talk about it, to show you pictures. And most importantly, the floor is always open for questions. So if you don't understand a concept, raise your hand. It's okay. Let me tell a story before we get into the rules, because I want you to feel comfortable asking questions, guys. When I was in my early 20s, I went to a trade school. I went to a motorcycle mechanic school in Phoenix, Arizona, and I knew nothing about mechanics. I had no idea how internal combustion worked. I just rode motorcycles, and I thought they were neat. And you have to take a theory class, and this is your theory class. And when I was in this theory class, the instructor's up front, in front of all of these people in the room. There's about 60 of us in there. And he's talking about camshafts, like everybody was born with a camshaft under their pillow. And I had no idea what he was talking about. He might as well have been talking another language. And I was overwhelmed, and I was nervous, and I was scared. I was like, oh my gosh, I don't know anything. This sucks. And then I realized that I was new. And it's okay to be new. And new is a wonderful place to be because it gives you carte blanche to ask all the questions. And I raised my hand in front of 60 gentlemen in this room, maybe a couple ladies. And I said, what's a camshaft? And some people snickered and a few people laughed. But I got my answer. I got my answer on what it was and what it did and how it worked. And guys, I went on through that school starting with absolutely no knowledge, and I graduated at the top of my class, and I was a mechanic for years, and I fix all my own stuff. But I do realize that it takes a little bit of courage to ask a question in front of a group of strangers. But remember, these are strangers, and I have not seen one person from that school since graduating. Not one person has stopped me in the grocery store, the mall, and said, hey, remember that time when you didn't know what a camshaft was? I got my answers and I found my success, guys, and I encourage you guys to do the same thing. So let's break it down. Large chart leads the way. Large chart tells us what to look for. Large chart is going to let us know when it's time to find an entry, and it all starts with strong triggers. And there's two lessons that come with strong triggers. I'm going to go to my picture here. The first lesson is trend. The trend is your friend, right? The background on the large chart will tell you which direction you should be trading. If the background is green, you're looking for rules to be met for high probability trend trades long. And if the background is red, you're looking for rules to be met for high probability trend trades short. I mentioned the color because it just allows you to go with the trend. But also, in an uptrend, when the background is green, in order to have strong triggers, and guys, these are your trigger lines. 2 solid lines make your small triggers. 2 dashed lines make your large triggers. The small triggers and the large triggers have to match the color of the background in order for rule number 1 to be met. And to have those strong triggers, your small triggers must be up and above the large triggers. So I can't have strength if they're below. And then my large triggers have to be wide. They have to be in the direction of the trend. And there is the space created between the two. Let's take some pictures today. The space that is created between the small and large triggers. And this is what I want you to picture. I want you to picture scissors. Can you guys see that? Here's my scissors. And these scissors are open. And when they're open, they can cut. They can get some work done. It's time to go after it. So in a downtrend, when the small are below the large, when the large are wide, the colors match. But most importantly, my scissors are open. There is a gap between the small and large triggers. Guys, this is strong triggers. This is when the odds are favorable for the market to continue up in that uptrend. This is when the odds are favorable for the market to continue down in that downtrend. And odds favorable momentum. Ladies and gentlemen, this is our battle cry, and this is rule number 1. Hey, good morning, 10K. Let me give you some verification on that test. Absolutely perfect. We got you as those charts are calculating. Nicely done. Guys, odds favorable momentum pushes a market, and odds favorable momentum can break key areas, and odds favorable momentum can even cover some of the mistakes that are common as a new user, because it's difficult to stop that large chart momentum. But eventually scissors close. The small triggers work their way inside of the large triggers. When this happens, we call this a weakening of the large triggers. And rather than having a market where the odds are favorable for it to continue down, you have to tell yourself anything can happen up or down. With this weakness, very often you see deeper retracements. With this weakness, very often key Fibonacci areas hold. And with this weakness, it becomes a little bit of a crapshoot as you look for a trade. So strong triggers lead the way. And when I have strong triggers, guys, see these tails on my large chart, 1 bar? Those are the pullbacks on the smaller, faster chart. And you will buy Fibonacci support or sell Fibonacci resistance when you have those strong triggers. And you'll be able to pinpoint where the bottom or top of that tail is likely to form on a large chart because of that refinement process. So let's open up a large chart. This is the S&P, guys. And starting from where the market reversed right at Fibonacci resistance with strong triggers, guys. Small separate everything. Scissors are open. Can you give me a Y new users? Here, let's do this. Let's take pictures because we have both of them great. That separation is strong triggers. Smalls below large. Colors all match. Space between. And guys, let's just call it OFM, odds favorable momentum. Can you guys give me a Y in the room? If you see this strong trigger look is what pushed it down. This strong trigger look is even what broke that key Fibonacci area. Your job is to learn how to recognize that strong trigger look. There it is up, there it is down, there it is up. All day it's going to change. But I also want you to see smalls are inside of the large. So let's do this. Smalls inside large. Weak triggers. No momentum. Rule 1 not met. Anything can happen. Anything can happen. And guys, sure enough, it did. That market reversed and pushed up. And once you know the difference between the two, this one says, look to buy Fibonacci resistance. Look to buy Fibonacci resistance. Look to buy Fibonacci resistance. Look to buy Fibonacci resistance, resistance, support. Guys, it's very, very clear. This one says, don't do a darn thing. Sit on your hands. Wait for the best of the best. Your money is worth it. You're going to go through and you're going to study these looks and you're going to annotate charts like this, and it's going to pay dividends for you. So, rule number 1 says, I have to have momentum. I have to have strong triggers. I need a market that's likely to continue. And once I have it, guys, I got to make sure that I'm not trading into an area. I've got to make sure that I'm not trading into something that could stop the market, that could ruin my good time. Termination conditions are Fibonacci-based indicators that may or may not stop the market, that could create an untradeable bounce that might reverse it completely. I want room to my profit targets, guys. I want a clear path. So I'm going to make sure that none are present. These are the areas on your large chart that may behave as a termination condition. And you don't have to know how they came to be. You don't have to know the mathematics that go into it. You don't have to be able to program to understand it. The only thing you have to know is that these horizontal lines on a large chart are where decisions are most likely to be made by the large crowd. These horizontal lines can stop a market. They can create bounces. So let's name them so that when you see them on the chart, you say to yourself, that's a divergence high. That could behave as a termination condition, guys. A divergence high, this pink line, magenta line, will print off of a pivot if there's a loss of momentum at that pivot. If momentum doesn't follow price up and heads back down, you're going to see a pink line. You'll see a cyan line from a low. I want you to, anytime you hear divergence, I want your brain to scream loss of momentum. I want you to associate this look with a slowing in the market. We have Fibonacci resistance, which is a red line. When the market is trending up, this red line may stop it. It may create a bounce. It might even reverse it completely. Fibonacci support is the blue line. And when the market is trending down and reaches that blue line may stop the market, may create an untradeable bounce, could even reverse it completely. We're going to look at yellow 1-to-1s. And yellow 1-to-1s are kind of fibs that print right in the moment. This is a very active throughout the day. If the market is trending up and reaches yellow 1-to-1s, those yellow 1-to-1s may behave as resistance, the same as a red fib. And these yellow 1-to-1s in a market that's trending down may behave as support, the same as a blue fib. And then there is the mid band, and there is one time when the mid band may behave as a termination condition. And if price is above it, you'll notice that it's green, and it's more likely to behave as support. And if price is below it, it'll be magenta and likely to behave as resistance. So what I want you to remember, and this is the most important thing, is that when the large crowd pushes the market to one of these areas, they're very likely to make a decision. And you can see these areas long before they get to them. So to identify it as a termination condition, there's two steps. There are two things that need to happen. The first thing is that price reaches the area. So price reaches resistance. Your dynamic Renko bars, these price bars, get up to and within a tick even of resistance. When they reach resistance, the only thing that you have to do is ask yourself, where are my triggers? And if your triggers remain below resistance, guys, this resistance is a termination condition. This is an area that could create a big untradeable bounce. This is an area that could stop it, and there could be a fight between buyers and sellers right at that area. This area may reverse the market completely, meaning that those large triggers, the dash triggers, go from green to red. And guys, if this termination condition can be a fib, can be a yellow 1-to-1, can be a divergence high. If a termination condition reverses the market, it is a strong top. And a strong top is a precursor to the highest probability trend trade that you could take. A strong top is rule number one for at least 3 trades that I can think of. So no triggers through, reversal, that's your strong top. You're going to use that later in life. If those price bars push down and they get to Fibonacci support, all you have to do is ask yourself, where are my triggers? And if the triggers remain above support, guys, it's a termination condition. It may reverse the market, become a strong bottom. It could create an untradeable bounce. There may be a fight. And guys, this is what it looks like when Fibonacci areas hold. But they don't always hold. Sometimes they break. If they didn't break now and then, we'd be caught in a range for the rest of our lives. I'm going to show you what it looks like when an area breaks, but before we do that, let's take a look. And this is the S&P. We'll just start here. Price reaches resistance. None of the triggers break. Absolutely no trades long, and it keeps you out of a loser. Weak triggers, rule number 1 not met, so no trade, keeps you out of a loser. We're going to talk about that look, but look at this. Even with odds favorable momentum directly into Fibonacci resistance. And look at the reaction. Avoidable losses, guys. We're talking about avoidable losses by identifying termination conditions. Can you give me a Y in the room if you're with me? And guys, I'm asking you, L and PAX, does it make sense? Price reaches, where are my triggers? I'm telling you, this is the golden goose. This is the keys to the kingdom. Areas break. This is what it looks like when an area breaks. Awesome. Price reaches resistance. This is number 1. All the trigger lines are still below. This is a termination condition. You have to wait to see what the reaction is. Is it going to bounce? Is it going to break? Is it going to reverse? Hell, I don't know. I'll never know. So my job is to stop, to do nothing, to wait for the reaction. If it's going to break, this is what it's going to look like. First, your small triggers are going to absolutely smash through that area. You're going to have odds favorable momentum. But the large triggers are going to stay below that area, below that red line, guys. And when I have this look, number 2, I have to pause because this area has the potential to break. And there's trades that you can take based on that potential. And I'm going to give you a plan with very specific rules to optimize your chances of success. But it's not broken yet. It's not a clear path. And rule number 2 isn't made yet. It's not in play. But once your small triggers and your large triggers get above that area of resistance, well, now that area is considered broken. Both lines of both triggers get north of resistance. Well, now resistance is support. Now the path is clear, and I'm going to look for my rules to be met for that high probability trend trade long. They break up and they break down. Price reaches support. Triggers remain above. I'm going to sit on my hands and wait for the reaction. It's either going to bounce, break, fight, roll. I don't know. I'm just going to do nothing. Maybe I even stand up, walk to the other side of the room. If my small triggers smash through with odds favorable momentum, but my large triggers are lagging behind, this area has the potential to break. There are opportunities, but I have to make sure that I don't sacrifice momentum, right? Because it takes momentum to break areas, but once the small and large get below support, support's broken. The path is clear until I reach the next line. Support even behaves as resistance. So let's go back and let's see. Termination condition. Smalls and large get below, support is broken. Look how it pulled right back to it as resistance. This one had the potential to break, but did not. Opportunities on the way down, weak triggers again, push it to resistance. And now we're just kind of limbo. The colors don't match. We're in that 90%, guys. We're in that 90% where we're not sure what we're going to do. This is crude oil. Let's take a look. Weak triggers, right into resistance, right into support. There's a mid band. There's a divergence low. You can literally watch the market bounce off of these key areas. You can go back. You can see where resistance holds with all the triggers below, and down it goes. Where a divergence low creates an untradeable bounce. Where resistance stops the market, even with odds favorable momentum, and pushes it the other way. Guys, once you go and do a little bit of study, you're going to learn to respect these lines. And once you respect these lines, you're going to realize that these lines are very often the reason that 90% of our day is doing nothing. There will be times when your path isn't clear because areas are stacked, because you've got multiple support levels, because you've got multiple resistance levels. And this really is 90% of your day. It's okay to do nothing. It's boring, right? You're not making money if you're not in the market, but you're also not giving it away if you're trading into these areas and the market reverses or creates an untradeable bounce. The futures markets trade billions of dollars daily. And you don't have to be in every move. You don't have to be the first person in. You don't have to be the last person out. Guys, if you can find a way to consistently make $400 a day, and you will, you'll see that potential within your first week with a little bit of study. You'll find that it's not that difficult. $400 a day is a six-figure income through your day trading. So we focus on trading from areas to areas, using momentum so that the market's more likely to push, and making sure that we don't get caught up from rule number 2, guys. Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. You see them long before you get there. And these become your market's likely to go to areas. Market may stop. Rule number 2 can keep you out of consolidation. It can keep you out of chop. And 90% of your day is just waiting for these things to come together. So 10% of your day can be trading a pattern that has been proven to win more than it loses. Rule number 2 is the most broken rule among new users. Rule number 2 is even the most broken rule among experienced users. But what you'll find is when you get away from these decision-making points, life tends to be a little easier. So, rule number 1 says that I must have strong trigger lines on the large chart to give me that advantage of momentum. Rule number 2 says I can't trade into a line that may stop the market. I need to have room to my profit targets. I want that clear path. Guys, this is your core. We have just given you the foundation that's going to pay dividends for the rest of your life with this software. But we're going to define our entry area. We're going to find that high probability trend trade. And we're going to do it with a lot of precision. But I have to talk about one more termination condition before I do. There is a time where your small chart will show you the change that you can't see on that big slow chart. And if you're looking at your small chart, you go to it for an entry and you see 3 divergences in the same price range. 3 cyan lines from a low. Oh, I appreciate that, Pex. And it gets easier as you go. Thank you for that. 3 divergences from a high. 3 cyan lines from a low. 3 magenta lines from a high. Remember, this is a small chart. As long as they're in that same price range, they may terminate the trend. They could stop the market. They could create an untradeable bounce. You'll see sometimes 3 divergences on the small chart and only 1 bar is printing on the large chart. So this is your little insight, your fortune teller, to let you know that things may be changing. So if I go and look for my entry and 3 divergences have printed, I don't take that next short trade. I don't take that next long trade. I simply sit on my hands and wait for everything to agree. But if those 3 divergences aren't there, this is where the precision comes in, guys. This is where you will be so precise that you will use a limit order to buy or sell a pullback at an area inside of triggers. I love it. It's a lot of words. And what it means, let's blow this up. You will buy or sell a pullback. That pullback is that fight from the small crowd. And you're going to do it at an area, at a fib, at a mid-band, at a yellow 1-to-1. But you have to insist that it's inside of triggers because triggers will define where the retracement is most likely to go, where the market is most likely to return. So you have large triggers on a large chart. And let's just show you. Price pulls away and it pulls back. And price pulls away and it pulls back. And you see it all day long. Price pulls away from triggers and it pulls back. Flat butt too, Ron, because we sit a lot. So by understanding that on the large chart, price typically returns to triggers, it gives you an idea of where the retracement is most likely to happen. Well, it happens on the small chart too. Very often it pulls right back to those large triggers. So what Nexgen has done, what my brother has done, is he's taken the 13.2 large triggers and put them on your entry chart. So right here we're looking at a picture of a 5-1 chart, your entry chart, that faster chart. Your sciatic is giving you trouble? I'm sorry, Kurt. I can't feel my legs. My second spine fusion was too late, so I'm always numb. Guys, when this retracement, when this fight from the small crowd starts, it may go to the 5-1 large triggers. It may go to the 13.2 large triggers. So we have large triggers on the small chart and we have what we call synthetic triggers on the large chart. And this range of triggers lets me know where the retracement is most likely to occur. So for you brand new users, there's a look that we call favorable large triggers. And favorable large triggers mean that both the large and the synthetic are wide. They're angled in the direction of the trend. But most importantly, your large and synthetic triggers are overlapping one on top of the other like 2 snakes riding piggyback. And what this does for you is it creates the smallest little zone where you should expect that retracement to go. It creates the smallest little zone for you to have areas inside of those triggers where the market is most likely to bounce. So it's the triggers that define the retracement level, but it's the areas inside of triggers where I expect the bounce. And the bigger the large and synthetic are away from each other, the more they're split, the bigger this range becomes. The tighter they are on top of one another, the smaller the range becomes, the more precision you have, the least amount of risk you have. So we're going to go through the process of defining an entry. And if you guys don't mind, I'm going to take it straight from the spreadsheet that I dropped in the room. And let's take a long trade together, guys. Let's look at this. And we'll go back to the live market and do this as well. Everything begins with strong triggers on the large chart. There has to be a separation between the small and large. They need to be wide. The colors have to match. So odds favorable momentum is rule number one. OFM, guys, and we have it in spades. This is beautiful. And then we have to make sure that price has not reached an area. And if it has not, guys, my path is clear. Now, I'm going to talk to you right now, and I'm going to say some of you will say, but Mark, we're only 8 ticks away from that fib. We're close to that fib. We're getting near the fib. And frankly, it scares me a little bit. I'm going to tell you, this is where understanding the language of termination conditions is going to pay dividends. Price must reach the area for it to be a termination condition. Until it reaches the area, guys, this is a target. This is where I'm hoping that trend trade gets to. So when the market is trading up here at 76, guys, this is what it looks like on your small chart. Your rules are met. It's time to look for an entry. So I'm going to glance. Where are my triggers? Do I have areas? But I have to wait. And I'm going to wait for a reversal bar on my small chart. Remember, this chart is one bar cranking to the upside with nothing in the way. This is why I'm looking for an entry. On my small chart, I'm going to let the fight start. I'm going to let the small crowd fight. And guys, this reversal bar says to me, all right, here comes the pullback. Here comes the fight. This is the beginning of it. You've got some work to do, Novak. Once that reversal bar prints, the first thing I'm going to do is I'm going to define where the retracement's most likely to happen. I'm going to look for those large and synthetic triggers. Hopefully they're one on top of the other, as close as they can be. And this white box, this defines where the retracement is most likely to occur, guys. It doesn't guarantee it, but from the top of those triggers to the bottom of the triggers, it doesn't matter if the large are on the synthetic or the synthetic are on the large. This white box is where I anticipate that fight from the small crowd to happen, to push. But triggers don't create bounces typically, guys. Triggers aren't the bouncy thing. I need fibs, mid-bands, and yellow one-to-ones inside of those triggers. So I'm going to create what I call the window of opportunity. And your window for a long trade will extend from the highest point of support inside of triggers. In this case, it's a green mid-band. And it will go all the way down to the lowest point of support inside of triggers. And this happens to be yellow one-to-ones. And some of you are saying, shoot, Mark, that's a range. Well, of course it's a range. We're good. We're not always to the tick good. But what I've defined with my rules is I know precisely where the retracement is most likely to happen. I know precisely where the bounce is most likely to occur. So my job as a brand new user, even as an experienced user really, is to simply activate a limit order. Just right click on my chart and set up a limit order about 2 ticks above the highest point of support, because my large chart has odds favorable momentum. My large chart has absolutely nothing in the way. I don't expect the small crowd to get a lot of work done. And if they can push, this is where I wait, hope, wish, and pray that the small crowd gets there, because there's nothing else I can do. The only thing I will ever be in charge of as a day trader is whether or not my rules are met, whether or not I had momentum, whether or not I had a clear path, and whether I took the time to define my beautiful entry, my great entry that creates manageable trades. And guys, if they get back here, I'm going to be in the highest probability trend trade that I could ever take. So I'm going to encourage you guys, learn this process and talk about the whys. Reversal bar begins the pullback. Reversal bar signals the fight. When my rules are met on the large chart, this is my small chart, and it is screaming to the upside. And there's a little fear of missing out that's going to happen. And a lot of you guys are just going to jump in. You're going to be like, oh my gosh, it's going without me. And if we did the old raise of the hands, who's ever done that? I'll be the only one to do it, but I've done it. Oh my gosh, it's going without me. Let me jump into this market. Guys, if you do that, if you succumb to that fear of missing out, the reversal bar that sets up your entry, that needs to be your exit. That's your loss of momentum, guys. There's no reason to hold beyond a reversal bar. Once the reversal bar prints, the pullback has begun, the fight is on. Let's figure out where the fight is most likely to go. Those are your trigger lines. So from the highest point of the triggers to the lowest point of the triggers is where this retracement's most likely to happen. But the trigger lines are not your entry. Entries come from areas inside of triggers. Guys, it is all caps. So you create the window. Where's this most likely to come from? From the highest point of support to the lowest point of support inside of favorable large triggers. Guys, that blue shaded area is where the small crowd is most likely to fail. That blue shaded area is where the trend is most likely to continue with the direction, with the momentum, with the clear path. You're going to activate a limit order a tick or two above that highest point of support. Don't be afraid. Don't put your entry below the bounce point. Get into that market at the highest point of support. This is your entry for the highest probability trend trade. Here's the great thing. Once you can define where the market is most likely to continue, you understand where it shouldn't go. If triggers define where the retracement is most likely to happen, anything on the wrong side of those triggers, anything below those triggers for a long trade, I don't care if you've got 1,000 Fibonacci areas of support. These are outside of the window. These are where the market should not go. And that phrase, where the market is most likely to continue, where the market should not go, is going to pay dividends not only on entries but also management. So let's do one to the other side. God bless futures. We can make money both directions. When the rules on my large chart are met, when I have odds favorable momentum, when my path is clear, my job is to wait for the reversal bar. But the reversal bar is not my entry. The reversal bar is the beginning of the fight. It's the beginning of that push. Where's that push most likely to return? From the lowest point of the triggers to the highest point of the triggers? Anywhere in this range? I have no idea where in the range, but I can make an educated guess by identifying areas inside of triggers. Guys, and I want you to think of this. Everybody's kicked a ball in their life, I'm pretty sure. If you kick a ball as hard as you can, the lowest point of resistance represents a big ugly wall. And that is where the market is most likely to continue with the trend. Anything on the wrong side of the triggers. Guys, once you get above those triggers, you have no idea where the market is going to stop. You don't know if it's going to be this line, this line, or a line 100 points above. I have no idea. I'm beyond the retracement point. I'm beyond the bounce point. These are not in the window, and we're going to define this as where the market should not go. You'll use that for management, because when you define where the market should continue, you know where the market shouldn't go. And this becomes your initial stop placement. Guys, this is where you're going to put your first stop. And you're going to say to yourself, and this is hard, new users, so brace yourself, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Anything that wins 7 out of 10 is going to lose 3, right? Your stop minimizes these losses. Your stop says, hey, I'm beyond the triggers, I'm beyond the bounce point, I want out of this one. My advantage is gone. I'll take that loser. It's a cost of doing business, and I'll wait for the next trade. But more often than not, when these advantages are in place, you're going to get what we call a confirmation bar, a reversal bar. Guys, this confirmation bar says, hey, guess what, Mark? We're going down with momentum. We're going down with that clear path. We just bounced off the area inside of favorable large triggers. Life is good. Reduce your risk 2 ticks above that reversal bar. Reduce your risk 2 ticks below that reversal bar. And you guys that love to enter the market outside of triggers, waiting for that confirmation bar helps you establish a stop as well. But my whole goal for you guys is that you learn these patterns, that you watch these patterns, and that you study them. So when my large chart has momentum, when my large chart has a clear path of the potential to break, you can circle a tail. This is how you're going to study. We're not even looking at the small chart. We're just circling that tail because that tail is the pullback. If that circle or square lines up with support or resistance inside of favorable large triggers, ladies and gentlemen, you have a high probability trend trade. You have a trade that has been proven to win more than it loses. Let me go to the S&P and let's do it just for grins. Let's circle some of those tails when I have odds favorable momentum and a clear path. There's a good one right there, right? We'll just go long, couple longs, couple shorts. Oh my gosh, they're everywhere. And then once I circle those tails, heck, I might even do this one down here. That one hit a fib, I can't circle that tail. This one didn't have momentum, I can't circle that tail. There might have been a tiny little one right there. Is everyone with me so far? I'm not trading. I'm just saying, hey, my rules were met. Let's see what it looked like on a small chart. So let me minimize that. Let's open up that entry chart and find our first circle. Didn't make it to the area inside of favorable large triggers before it hit the termination condition, guys. That wouldn't have been a trade. That's okay. They're not all trades. 90% of my day is doing nothing. This one, let's take a look. There's my first retracement zone. There's my second retracement zone. And there's all the bouncy stuff in between that zone from the bottom to the top. And that's what pushes it down right until 3 divergences. Says, guess what, Mark? That trend is done. There's your termination condition. If I back up, 3 divergences would have killed that one. I wouldn't have taken it. But the one before it, 1 divergence in the zone off the mid-band, that would have been a big stop. But if I use that confirmation bar, that's pretty easy money. Guys, this is how you're going to study. Right back to the mid-band, right at the triggers, right at the mid-band, inside of triggers. Guys, this pattern repeats itself every market. This pattern repeats itself every day. Your job is to learn it. Your job is to study it. Your job is to just take a couple days and learn how to identify momentum, guys. Use this. This is the Chart Reading 101. I built this for my new users so that you can get good at these looks. Go take those pictures. 25 each. Strong triggers, weak triggers, clear path, termination. The same way we did it here, guys. The same way. We took that picture, we annotated it, we talked about it, what it meant to us, strong, weak, right? Terminations, all those things. Do this. And if you do that, you're going to learn how to piece these 3 things together and create a trade. But most importantly is you're going to be a chart reader. You're going to be a rock star chart reader because repetition creates recognition. As you go through this drill, I'm giving you pictures of what it means to have these things true. Is the market coming from a strong top or bottom? This is your high probability trend trade checklist, guys. That means that there was a no triggers through termination that reversed the market. Remember, termination, not fib. Termination, not 1-to-1. Termination, not divergence low. Termination. Any termination condition that reverses the market on the large chart is a strong top or bottom. Momentum is always momentum. Momentum is a separation between the small and large, whether it's a big chart, little chart, range chart, tick chart, stock chart, options chart, doesn't matter. When my scissors are open, the odds are favorable for that market to continue on the large chart. When those scissors close, my advantage is gone. Termination conditions. We went through the life cycle. If price reaches Fibonacci resistance and all the triggers remain below, I'm just going to pump the brakes. I'm going to sit on my hands and I'm going to wait and see what happens. If the small triggers smash through but the large triggers lag behind, I know that it has the potential to break and I'm going to have a plan. I'm going to give you a plan to be able to capture this trade. But once those small and large break through, my path is clear until I reach the next area. So as you take your pictures, make sure that you're taking the correct pictures. And then there's those entries from the point of reversal bar to exactly where your limit order goes to where the market should not go. Everything you need to go back to study these to become a really confident chart reader. And then the second page is the trend trade checklist. And the trend trade checklist is something for you to print out, to put on your desktop, to give yourself something to follow. And nobody's ever followed this truthfully and done worse than 70%. In the history of me teaching this class, I've had engineers go back and back test it over a year and get closer to 83, I think was the number. These are the rules for the trend trade. Guys, these are the same things I think you should be writing on your chart every time you take a trade. When you take a trade, you annotate it, you talk to me, you should go through and you should talk about momentum, path, and entry on every one. Jen, we had a gentleman named Grant, and he was brilliant, absolutely brilliant. And he took the KISS plan that I'm about to give you guys, and he put it through the ringer. And I think it was 400 days that he back tested it, went through, had it run all the simulations, specific rules, and he came up with 82.3%. Pretty outstanding, right? What a great win percentage. And you know what? You guys trying to prove this wrong is one of the reasons that I keep so many people in this room, because I don't believe you can. I don't believe you can learn these rules, follow this plan, and not find success. So I'm going to give you guys a plan to follow. This is the KISS plan. The keep it super simple. Gary gave me that one. It used to be keep it simple stupid, but then HR yelled at me, and then it was keep it simple sunshine, but that sounds a little condescending. So let's keep it super simple, guys. And this plan is a stepping stone in your learning journey. So question mark, Mark, I like the way you did that. This is your first trade. This isn't your get-rich trade. This is the trade that teaches you to recognize the get-rich trade. This is the plan that and guys, when I say optimize your chances of success, this is the absolute, positively, without question, best way I have ever seen to take this trade. And then through simulation, through study, through class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, I hate AI. That was AI generated. When you can read your charts, you'll most likely change and grow your plan. Your simple plan for consistency, guys. The most straightforward approach to finding success is never fight the large chart. And when I say don't fight the large chart, don't commit financial suicide, guys. Don't trade against strong triggers on the large chart. The large crowd established that momentum. It rarely does you any good to fight it. Don't trade in determination conditions. That's where the large chart, where the large crowd is reacting, where they're fighting. You don't want to be inside their fight, guys. Just simply let the large chart lead the way and define your entry. We've spent an entire hour this morning defining an entry. We haven't even touched management. All we've done is learn how to recognize where the market is most likely to continue with an established strong moving trend, because that is our highest chance of success as a new user. You're going to have to manage that great entry. You're going to have to do something with that great entry. For me personally, management is where I began to pucker up. Management is where my palms really got sweaty. Management is where I had a feeling like there was something to lose. So the KISS plan, management strategy, is designed to do two things. The first thing, it's designed to help you move stops void of emotion. It's very if-then, putting your stops where the market shouldn't go. But even more importantly, it's designed to get you paid quickly. It's designed to get you in and out of the market before your emotions and adrenaline have a chance to really take over. So you'll make your own management plan as you grow with the software. But in the very beginning, guys, let your management be every bit as mechanical as your entry. Let it be very if-then. And the reality is your management plan is very dependent on your ability to enter the market where the market is most likely to continue, because this provides you the least amount of risk and the most room back to that potential profit target as you grow with the software. So if I enter, and this is based on 2 contracts, if I enter at the area inside of favorable large triggers, then my initial stop is 4 to 5 ticks below those trigger lines where the market should not go. Guys, when you get the software, when you download the workspaces, you have strategies in here, and they have 12 tick stops. Guys, 12 tick stop is not your stop placement. Your stop placement is where the market should not go. It may be 7 ticks, it may be 15 ticks, but you'll always know where that stop belongs, 4 to 5 ticks below. So if the small crowd doesn't push and take me out, if this isn't one of my 20 to 30%, then it's most likely going to be one of my 70 to 80, which means that I'm going to get that confirmation bar. I'm going to get that reversal bar in the direction of my trend. What this says to me is now the market is moving up with the trend on the large chart. Now the market is moving up with the momentum on the large chart. Now the market is moving up in the direction of that clear path. And now the market is moving up from the point where it was most likely to move up from, where it was most likely to bounce. So if I get a reversal bar, then I will move my stop 2 ticks below that reversal bar. It doesn't guarantee a winner, but I can tell you if that small crowd ate their Wheaties and they decide to push it down again, I might take a 3-4 tick loss instead of an 8-9-10 tick loss, guys. And that feels good, and small losses make it easier to make money. So at this point, they're either going to hit me for a smaller loss or they're going to get to my first target. And my first target in the KISS plan, remember, we're learning how to get paid, is only $100 away from your entry. That's it, $100. And most of you are like, oh, Mark, that's some crap. I can't make a living off $100. Guys, this is a base hit. This is $100 in your account. This is a feel-good move. This is a no more sweaty palms move. And nobody in this room steps over a $100 bill on the sidewalk. Guys, you are paid. There's that confidence. And your next stop movement is to go to break even. To take 100% of the risk off of that trade, to remind you that this is why you got in. Because the large chart, the big chart, says we're screaming north with nothing in the way. So you are either going to get stopped out break even, or it's going to go to your second target. Only options. And I'm going to tell you, break even doesn't hurt. Your second target is $200 away from your entry. Guys, look at that fluctuation. If you tried to tighten up, they took you out and went to your target anyway. Follow this plan and learn how to put your stops in the correct spot. The second target's $200 away. And guys, that $200 target means that you just made $300 on this trade. And if you made $300 once a day, every day in a trading year, that's a $75,000 year. Throw in 1 break even. You're at 6 figures. Get confident with the software. You'll be absolutely floored at the potential in front of you, guys. Your job as a day trader is to have a statistical advantage every time you take a trade. Your job as a day trader is to win more than you lose. Your job as a day trader is to get paid, guys. So as you move forward, remember, 4 break-even trades, 4 base hits is a 6-figure income. But the thing that you need to know before you go live, before you risk your money, before you join one of those prop firms, guys, you've got to understand why you're going to get into the market. And you're getting into the market on a pattern. And that pattern has been tested, it's been back tested, it's been proven, it's been verified, it's been validated. It wins more than it loses. And if it doesn't, it has no business being in your plan. And you have to know why you're going to exit, guys. And exiting the market means that your advantage is gone. It means that the market pushed 4 or 5 ticks beyond those triggers. It means that 3 divergences printed on your small charts, your advantage, your edge is no longer present. I'm going to get out of the market and wait for it to come back. You need to know these things, and you've got to learn to commit to these things. You've got to learn to trust your rules so that you can follow them. Your rules eliminate the need to know what's going to happen next. If you know that your pattern wins 7 out of 10 times, you need to take it 10 times and just be cool with it losing 3. That's a part of it. You never get to pick which ones lose. So if I'm in a trend trade, my KISS plan rules get me out as a brand new user. As I grow with the software, I might see other reasons to exit. My management may change. If I'm in one of those potential to break trades, it's different rules to get in, and it's also different management. And then if I add in a momentum trade, different rules, HVA trades, different rules. So learn one thing. And then when you're good at it, add the next thing. And then when you're good at that, if you feel like you really need it, add the next thing. But my promise to you was that I would give you everything that you need to be successful with the software before this first section of class was done. So we learned the rules. We identified them individually. We talked about what they mean to us. We know how to study them. We know where to study them. We know how to get feedback on our study with them. That's a lot. You guys have the ability to simulate. You have a working copy. You have the software. You also have the ability to post in the room 15 hours every week and get feedback on everything that you see and everything that you do. I've simplified. We've talked about the high probability trend trade. You've been given a plan on how to take it. The second page is how to take that potential to break trade. Yeah, that's right. I gave you 2 trades. And now you just have to learn the looks, guys. This is the part that I didn't give you. I gave you where to put your pictures so that you can study them. I gave you how to study the pictures, what it is you're looking for. But it's up to you now. The experience, the repetition, that's on you. And I can tell you, and I think anybody that's been in this room for more than a month will tell you that the effort that you put into learning the software and being a chart reader is what you're going to get out of the software. And the less time you spend learning the looks, understanding the rules, and the more time you spend chasing money, the less likely you are to get to where you want to be. So I'm going to talk about one more thing, and then I'm going to take a break, because I think breaks are important when you're a day trader. I think sitting in the same chair for too long is detrimental to your success. The key to everything that we do is understanding the basics, and then each day and week compounding a little bit, moving forward, getting 1% better. So for you brand new users, I blanket you with very conservative rules, and I harp on you to recognize advantages, and I give you a solid plan that optimizes your chances of success that you can choose to follow or not. But it's designed to give you a proven plan that wins more than it loses as you learn to read your indicators. So for all you new users, termination conditions are bad. Trading into a line is horrible. Not having momentum, don't do it. It's going to kill you. And oh my gosh, entries from beyond the trigger lines, you may as well fall on your sword, right? But the reality is that all these things aren't always bad. You're just not sure when to make an exception yet. You don't have the repetition. And then just like anything, the more time you spend with it, the more you're going to see, the more patterns you're going to recognize, the more opportunities, and your plan will grow as you grow. But you've got to learn the process that yields the results. It's one of my most endeared phrases. Process yields results. Your desire for wins doesn't produce wins. Your need to pay rent doesn't produce wins. Your fear of losing doesn't produce wins. It's the flawless execution, taking the trades of the patterns that have been proven to win more than they lose. So keep it basic. That's where the KISS plan comes in. And if you keep it that basic, if you follow the simple rules, and you're okay not keeping up with the Joneses, not looking for every twist and turn in the market, guys, you can find an extraordinary level of success. And honestly, you don't need to ever venture outside of the KISS plan. Most of you will, because you get bored. I've watched it over the years, guys. I've been doing this nearly 5 years now. And the further that new users deviate from the very basic, the core, the longer it takes them to get successful, the longer it takes them to create recognition, the longer it takes them to reach their goals. So question everything. This is for you new users. Don't you dare let me get away with leaving you wondering what something means. Raise your hand, ask, start the conversation. I encourage it. I want you to learn. Challenge me. I don't mind being challenged. It's fun sometimes, and we'll do it respectful. And give yourself grace. That's for my wife. Give yourself a little bit of grace. You are brand new. There's a lot coming at you. It's okay. If you break it down, if you keep it simple, if you learn one advantage, know exactly what it looks like before you go to the second one, you're like, oh, but how am I going to find a trade? Guys, you'll be on entries in 2 or 3 days easily if you keep it focused. So that's my first hour. It's the same first hour every day. I dropped a zip file into the room that says everything you need. Inside that zip file is Chart Reading 101. It's that high probability trend trade checklist. It's the KISS plan. It is, what else is in there? Oh my gosh, the daily goals that reminds you don't have to hit home runs every trade. It's the entry and exit conditions that remind you that you have to know what you're looking for. Guys, it is everything that you need to be successful with the software, except the repetition and the experience to do it. So I'm going to walk away, guys. If you have a picture, post it in the room. If you have a question, post it in the room. There's one thing I want you guys to do for me, and I bet you this is Paul's picture. Every time you post a picture in the room, there's 3 things that I need to hear from you. I need to hear, did I have strong triggers? And the answer is yes. And I love it if you draw an arrow right where the triggers were when you got in. These were my strong triggers, Mark. And then I want you to annotate. Did you have a clear path? And I want you to be okay saying, no, this one had the potential to break. Why do I want that? Because I want to know that you're reading your indicators correctly. I want to know what you see, because if it needs a little help, I want to help you. And then I want you to define your entry. And guys, this one is going to pay huge dividends over the course of time. Entered at an area, and then get that caps lock on. Inside of triggers. And then I want you to feel free to tell me where you exited. And you may put, I don't know, got scared and paid, right? Or predetermined target, or whatever it was, whatever did it, right? But if you give me this every time, guys, this is how you're going to get the best feedback. This is how you're going to get the most complete feedback. And I'm telling you right now, I want to see some of you posting this trade in the room, because egads and little fishes. What an amazing looking trade that fits every rule that you have. I want to save this one to 101 real quick, how to annotate, because I lost everything yesterday. So are there any questions before I go away? Any questions? Oh, here. Check this out, new users. If I circle a tail, it's the lowest point of the pushback right to support inside of favorable large triggers. Pretty kick-ass, right? That happened just a couple minutes ago live in the market. And then a termination condition with weak triggers pushed it. Holy smokes. It's every lesson we just talked about right here live in front of you. Pretty outstanding, isn't it? How did he know that was going to happen? Because patterns repeat themselves. Every day the market has a memory. That's S&P. Weakening triggers on the potential to break. No areas inside of triggers. 1, 2, 3, 4 divergences. Oh my gosh, how many lessons can we get in one moment? And I think those are the only 2 I have open. That's right. So guys, I'll see you in 5 minutes. Post a picture, post a question. Put me through the ringer. I'll see you in 5. Back at it. Let's get into that next hour. I want you to see something, especially my new users. I want you to check this out. I'm going to take a picture of this chart right here. And then I'm going to open up and I'm going to go to the Nexgen page and go over to termination conditions. And this is why I stress patterns, guys. This is why I talk about patterns every day. Let me find my picture. And I'm going to open up this picture and I'm going to take a picture. This picture was taken in 2021 using NinjaTrader. And I want you to see exactly what happened. The market came up to Fibonacci resistance and we knew to not go long. And it pushed all the way down to support level in a mid band. And those large triggers didn't follow. And the market closed the gap to the large triggers and eventually went up to the higher resistance. The triggers were very weak now, and it started going down. Prepare to be amazed. The market pushes up to Fibonacci resistance, retraces back to a support level in the midband, large triggers don't follow, goes up to the second level of resistance, and started the push down. Guys, these pictures are easily 4 years apart from one another. This has been in the manual. This is when crude oil was trading in the 50s. This is the S&P, and this is happening right now as we speak. I can't overstate the importance of learn the patterns, guys. We're looking for patterns, not trades. We're looking for opportunities that have been proven to win more than they lose. And I love it when I see that, because it just reminds me that I'm not in control, that there are some forces out there that make things happen, that they're going to do whatever the hell they want to do. So why don't I just find the pattern they established and learn how to get paid with that? So feel free to be amazed. Feel free to ooh and ah a little bit. I know that was pretty outstanding, and you're probably going to call somebody and tell them, wow, you should have seen what Mark did today. That was crazy. I'm so excited about it. All right, guys. So let's look at some pictures and see what happened. Ron got us going. Ron is the king of the chili dog. And what is the chili dog? Thank you for that, Marty. I needed somebody to react. You get me. Waited for price to completely clear trouble. Why? Hey, good morning, Cav. And Ron says, once I learned the high probability trend trade, these trades started to present themselves. Why does he wait for price bars to completely clear trouble? Because trouble is where decisions are made. Because troubles are where bounces happen, where reversals come from. So Ron lets the large chart lead the way. Price breaks through the area, lets it get below everything, and he takes a little snippet. Just a little $100, $110 trade. He's saying the only thing I've got going for me is momentum and a path. I know that retracements happen all the time. Let me get in, let me get out, let me get paid, let me wait for the next trade. Guys, this is a base hit. Base hits pay bills. I can't stress that enough. Base hits pay bills. Ron, beautiful trade. And he called it the chili dog because it gives you enough money to go buy a chili dog. So, all right, let's see where we're at. I wanted to show you this one. I took this right before class started. This was the S&P, guys. And this was one of those 50-50 trades. This was one of those potential to break trades. And when I give you the KISS plan, the same way, the exact same way that the high probability trend trade part of it is designed to optimize your chances of success, when you go to the 50-50 trade, that area with the potential to break, there's a different set of rules. And the first thing it says is that the market needs to come from a strong top or bottom, from a termination condition that reverses it. And if it doesn't, it's less likely to win. And you have to have strong triggers on both charts. And if it doesn't, it's less likely to win. And then here's the key, guys. No divergence on the 5-1. If you were paying attention, divergence is a loss of momentum. I've already given up a clear path. Why on earth would I give up momentum? So no divergence. And then it reminds me no divergence. And then in management, it reminds me no divergence. And guys, this 50-50 trade wasn't from a strong top or bottom. And this 50-50 trade had divergence. And it dropped like a ton of bricks. Your rules are designed to keep you safe. Your rules are designed to give you an advantage. Sorry, all of my new people dropped out of class. Maybe I'm being overwhelming. Or maybe they're just like, I know this stuff. I'm going to buy software. You're still here. Oh, thanks, MK. Is it Whiffley, MK? I'm going to call you MK. Welcome to the room. You snuck in here. No one told me you were coming, Kelly. It's great to have you. It's great to have you. You've been here since 8. I saw the name, and if my salespeople don't tell me that you're new, sometimes I think you're old. So I apologize for that. And you've got the green check next to your name, so I dig it. You're Mike's brother. Which Mike? Iron Mike? In Louisiana? Mike Walker. Okay, right on. Welcome. Good to have you. That's him, Iron Mike. Is he really Iron Mike, or does he just make that up? He's probably Squishy Mike, isn't he? He's not in here, so I'll talk mess about him. Big fan of him and his wife. So he'll tell you, breaking it down simple is the way to do it. Let's look at some pictures, guys. Let's talk about it. 10KM says, Mark, I just needed to post a test here. I love it. You've got great looking charts. Those are pretty. And then Steve Diego comes in. And Steve says, Mark, I have all the charts. I shouldn't comment on that. He'll be here. I love it. Friday for a week to help you, then you can comment. I love it. So he's going to help you as well. He's good. He's learned a lot of patience. Let me help as well. Learn how to take pictures. Get him in the room. Let me give you all the feedback that I have for you. Every now and then I stumble into some smart stuff. All right, so Steve Diego, we're going to start on his NASDAQ trade, and he says, check it out, Mark. Calculated and placed a sell stop 2010-24 to enter short when price cleared the fib. Price was moving so fast, you heard the entry and target filled as you were getting coffee. Slipped 5 ticks, fib update 1 second. 1 second. I like the way you did that, Steve. I've played with that before, calculating where the next bar is going to clear and then taking an entry there. Nicely done. And just beautiful. Quick profits, $195, 2 seconds. And then over here we had momentum, we had path. You take the pullback to support inside of triggers. You get paid. And that's one that didn't finish, right? But what a great trade. Look at that entry. So Kelly, this is one of the things that I want you to see. He got in at the low tick, 2 ticks above support inside of triggers. Guys, this is the precision that comes when you learn the language. That's beautiful. And it gave him plenty of time to get paid. It's a bad 50. See, but you weren't 50-50 on your chart, Steve. You don't have a fib there. You were solid, dude. Mid-band wasn't, I mean, that was high probability. You did great. And then this one is momentum and nothing in the way. And then there's one of Ron's trades, 220, chili dog. Absolutely beautiful. Momentum and path. Guys, that's got to be what you say every time you look at a chart. What is my momentum? What is my path? Oh, they're good? Hell, let me find a way into this market. Let me find a way to get paid. Let me find a way to capitalize. Let's see what Miss Jen did. Miss Jen said, Mark, you know that when I get a strong top, and odds favorable, and a pull back to the lowest point of resistance, I'm going to make some money. And that's exactly what you did. Flat triggers here, so you had a tight stop. Absolutely beautiful. Nice job. Closed chart at the second divergence. I love it. You get paid, and you get out. Absolutely no harm. Money on both. Nice job, Miss Jen. Nice job. And then Rob, let's see what you did, brother. All right. Do I have odds favorable momentum? Oh, I don't. I just don't have it. But I do have a clear path. Rob, can you give me a Y if you see it? This one you had momentum and room to the target. Is that this one? No. This one, I don't have momentum. This one has momentum. This one, the momentum is gone. This one went down to the target effortlessly. And you get in, and you're still missing synthetics, and maybe that's intentional. And you've got 3 levels of problems there. I hope that one worked out. Little unorthodox. But I like that you didn't go short on the way up. You let it all roll. You let it agree. You've got momentum on the small chart. You got a fighting chance for that thing to go down. Large triggers are still down. Smalls are below. You're below the fib here. I can see a lot right with it. I can also see a couple things wrong with it. I'd love to know how it turned out. Paul says, check it out, Mark. Odds favorable momentum. Areas inside of favorable large triggers. I'm coming from weakness right at a fib, divergence prints. If I'm not mistaken, we might have looked at this one in the room. Look at that entry, ladies and gentlemen. Once the reversal bar printed, Paul had about 4 ticks of risk. About 4 ticks of risk on that trade. Beautiful trade. Are you guys starting to see a pattern here? Pull back to areas inside of triggers. Pull back to the areas inside of triggers. Looking for the area inside of triggers. Pull back to area right at the triggers. This one was pull back to the area right inside of triggers. How many times do you have to hear it before it sticks? How many times do you have to see momentum? Oh my gosh. And path. And chili dog. And money. Nicely done, Marty. Notice how the triggers are accelerating. He says, I know this isn't my best momentum look yet, but they're accelerating up. They're getting further left. And he's got odds favorable momentum out the wazoo on that other market. Nicely done. What a great trade. You guys are impressing me today, I'm not going to lie. Whole lot of awesome falling out of you guys. It's not just a top, Paul. It's a really good top. That's a pivot stop out at resistance, creates odds favorable momentum, gives it the potential to break. Look at that sniper freaking entry. Paul goes short at the high tick, right at the mid-band. He gets paid on the first one and he knows a strong top, you can look for bigger moves. And he's holding for the home run there. I like it. He's already paid, has nothing to lose. Let's see if it goes. Paul, great trade, dude. James, welcome. James says, Mark, I want to introduce you to the momentum trade. So there's your termination, a mid-band with the large triggers a full bar away. Everything rolls. And when it rolls, these triggers are coming down strong. These are flat. And you've got momentum on the small chart. And guys, this is the trade that Nexgen teaches. This is called a momentum trade. When you break through the area with all of this momentum coming from a strong top or bottom, or at least a termination condition, you just sell a little snapback right to that fib. Super low risk entry. And it revolves around momentum. When the momentum went away, James says, well, hold on. Let me get paid. If I'm taking a trade based on momentum, let me exit with a loss of momentum. I think you did a great job with that one. And then when he gets back below that little trouble spot, he says, nothing's changed. It just got better. Let me make money again. Absolutely. Outstanding, James. Nice to have you in the room. Haven't seen from you in a little bit. And guys, that's all the pictures that I have. Makes me a little sad. That's all the pictures that I have. So let's go do some live market talking. So new user, I don't know if I have any new users left. Guys, what do you think? Do I have the momentum that I need for a market that may push lower? Well, Kelly, you're in the family. I know you're here. I'm talking about the other ones. You are, I see you. So Kelly, your question, do I have odds favorable momentum? My smalls are below the large are wide, there's space between. Amen. What do you think? Strong triggers, guys? Absolutely. So once I establish strong triggers, I have to say, do I have a clear path? My small triggers are below support, but my large triggers are above support. Is the path clear? What do you guys think? Not yet. What do we call this look when 50% of my triggers are above and 50% of my triggers are below? No, not anything can happen, Bob. This is the 50-50 look. This is the look where this market has the potential to break that area because of the triggers. But guys, it's not perfect. And look at this, divergence, divergence, divergence. So many reasons for me to not take a shot at this breaking because my small chart is telling me that things are slowing down. My small chart is telling me, hey, this isn't your best chance of success. It's less likely to break than it is to hold. And it may go down, but my advantage is gone. And I never know what's going to happen. And we'll see what it does, guys. We'll come back to it. All right, same questions. Crude oil. Odds favorable momentum? Absolutely. Clear path. Potential to break. If you are inclined to take it, that's the point where the market is most likely to continue if it's going to continue up. But this particular trade is not coming from a strong bottom. And the KISS plan tells me that I really need a strong bottom to feel great about a 50-50 trade. And we'll see what happens. A lot of 50-50s, huh? That one broke, didn't it? But now it's odds favorable. Potential to break. What do you think? Are we going to get a pullback to an area right inside of those triggers? Uh-oh, divergence printed. That breaks the KISS plan. We'll take it anyway. Because most of you are going to be inclined to break your rule because of this. Oh man, that one went down anyway, even though my rules were broken. Let me take this one with my broken rules. Because if it happens one time, well then it's got to happen every time, right? And we'll see what happens. And they may go down. They didn't give us an entry. But now I've got momentum and a clear path. How cool is that? Maybe they come back for us. Maybe they don't. Guys, this is all the market is. What does my large chart say? My large chart says look for an entry. My areas are on the wrong side of triggers, though. Do you notice how I don't have any areas inside of triggers? They're actually on the wrong side of the triggers. This is one of those times where you can say to yourself, it's almost perfect. I have momentum. My path is clear. But is it going to be this fib or that fib? Is it going to be this mid-band? And you have to answer, I don't know. It could be any of them. So if I come up to one of these areas, can I use one of those reversal bars to get in? Can I use one of those confirmation bars? Well, shoot, it's not going to give it to me. S&P's not playing nice, is it? But now I have an area inside of triggers, but I also have two divergences already. A third divergence would kill that potential. Look at that. Bounced right from where it was supposed to, didn't it? 2 ticks above support, inside of triggers, and went right to the fib. Guys, what do you want to talk about? What would make you happy to talk about? What's the lesson that you're like, man, I wish Mark would talk about XYZ. I wish he would cover this. I wish he would take a minute out of his life to explain this concept, because I keep hearing it. I keep seeing it in videos. There we go. Stupid divergences. And I just don't know. I just don't know. And I wish that he would talk about it. Guys, let me know. This is what I'm here for. This is literally what I'm here for, is to answer every question that you have, to calm every fear that you have. Look at that. 3 divergences. And we are definitely 5 ticks on the wrong side of those triggers, aren't we? Rules are designed to keep you safe, guys. Rules are designed to keep you from throwing away money that you shouldn't be throwing away. If you felt like you missed not having your rules met and it went down anyway, you're more inclined to get run over and take this loser. Here we go. Until I have time to go through all the education on the site, my work with Mike for a bit, your questions would be coming from a first grader. That's what I want. Man, I want you to come at it like a first grader, Kelly. I don't want you to know everything. I don't want you to feel like you have to know everything to ask a question. I think one of the greatest things you can do is just admit, I don't know. And then ask. It's a first grader room. Here, I'm going to share this with you guys. I drew this up over the weekend. So, Kelly, let me drop this in the room for you. And anybody studying trend trades, check it out. See, and I don't even know what TOS is. So I would have to ask you questions about TOS because I have no idea. See? I had no idea. Guys, 5 days a week. This is what I did. This is going to be the 1 or the 2-page how to do it. Let me know what you think of this. This is the, hey, Kelly, you're brand new. I'm going to drop this in your lap. Do me a favor, read it. 5 days a week, Nexgen will teach you rules on 2 charts, 3 rules, to give you the skill to recognize advantages and turn them into trades. Each rule will be discussed individually, and you'll understand how to use them to enter the highest probability trend trade taught. The advantage of momentum defined through strong triggers, the advantage of a clear path with no terminations, the advantage of entering where the trend is most likely to continue, using a combination of Fibonacci triggers and low-risk precision. Momentum and clear path are the core, and these 2 concepts alone are enough to create a trading plan that's consistent and profitable. Does the language sound familiar? Study them, learn them, commit to them, and once recognition is second nature, you'll find your best entry. Until you do. The high probability trend trade gives you the trade that embraces the advantages, has the potential to win 70 to 80% of the time. This is the trade that helps you recognize the advantages of momentum and a clear path through rules 1 and 2. And it is a trade that will build confidence in those advantages. The high probability trend trade is not your only trade. It is your first trade. Learn it and the possibilities seem endless. So, Mike, what I did here is exactly what you need. Trust me on this one. So the trend trade rules, there's your rules, and I'll just show you. It's a picture. There's active links. There's your rules. Come on. Same rules I share every day. Here's the charts and why we use them. Same picture I share every day. And then Kelly. I see MK and I think Mike. Kelly, check it out. What am I looking at? These are the indicators that you're going to see on your chart. Here's your trigger lines defined, exactly what they are, what they look like, and how we're going to use them. We're going to use them to define momentum. Areas defined. These are the areas, same picture from class. So once you look at these 2 pictures, you know what the indicators are. And if you don't overthink it, the next section teaches you how to use them. How to use advantage. There's your picture. How to define a termination. There's your picture. Strong top or bottom. What it looks like when it breaks. And why you need to be patient. And then the entry advantage. Check this out. Why? Which chart? Well, it's the small chart. Why? Because it's a refinement chart. Because it takes one bar and breaks it down. And this is, we did this in class together with a new user. I want to share this with you guys. Defining your entry. The first step is once the rules are met on the large chart, you're going to turn your attention to the small chart to find your entry. The first thing you need is a reversal bar. This is a visual that your pullback is starting. Once I get the reversal bar, I have to identify via the triggers where the tracement is most likely to go. Price trends to return to large triggers. You have large triggers and synthetic triggers on your entry chart. From the highest line of the triggers to the lowest line of the triggers is where the market is most likely to retrace. The tighter one on top of the other they are, the smaller the area becomes. This is going to help with accuracy. The next picture is define. When I identify my trigger lines, I understand where the market may return, but I need an area inside of triggers. Areas can be fibs, mid-band, yellow 1-to-1s, inside of triggers. This box from the highest area inside of triggers to the lowest area inside of triggers shows me where the market is most likely to bounce in the direction of the trend. So the next picture, I have to set my order. Activate a limit order 2 ticks above the highest point of support. You've done all you can do now. It's up to the market to give you an entry. You're in. You're in the market. If price reaches your order, you're now in a long position. You have the advantage of a market where the odds are favorable for it to continue up via strong triggers. You have the advantage of a clear path giving you room to your targets because there's nothing in the way. You have the advantage of having entries precisely where the market was most likely to continue with the trend. This is your high probability trend trade entry. So everything that I just showed you has been consolidated into 2 pages. And then how to study. Guys, what happens, and Kelly, you're going to find this, is Mike is going to probably bypass some steps and tell you to find the trade. He's not going to talk to you about learning how to identify momentum first or identifying termination conditions second. He's going to show you how to trade. That's what my brother did to me. If you break it down individually and you go through these very simple process, it's easy. So what I did, Mike, is you are my guinea pig. You are the first person outside of my sales team that has gotten that document. Go through it, read it, give me some feedback on it. But I believe, without question, that this will be everything that you need to be able to recognize and study the high probability trend trade. And then once you can do that, holy smokes, it's effortless. And Ron says high probability trend trade is not the get rich trade. It's more like the owner's manual to teach you how to read Nexgen charts. I believe it. I just dropped it in the room. It's about 5 comments up. Here, I'm going to drop it in right below your comment. And what you can do is you can either download it. If you click on it, it'll go to your downloads bar. Or you can just, where did my, here it is. You can literally grab it and drag it over to your computer as well. Put it in a folder or something or on your desktop. And then Ron's absolutely right. This is the owner's manual. This teaches you how to find your get-rich trades. And then Kurt, you use Thinkorswim as well. I have 0 experience with it, so I won't say anything about it. But I love when you say Nexgen is the best futures trading software, period. Keep studying the chart reading. You'll have your eureka moment. Be patient. I love it. Thank you so much. And tell Mike I said thank you for telling you to study. But practice. You've got the software, right? You've got the software. You've got Simulator. Dude, break some eggs. Make some mistakes. Take some trades. Have some fun. And then just drop them in the room and we'll talk about everything. So that's it. Look at the termination condition. I might have taken a loser there. Odds favorable, clear path, pull back to support. I would lose that one all day long and feel good about it. Wouldn't faze me. Not even a little bit. What do you want to talk about, ladies and gentlemen? Crude is a little devil on your shoulder right now. It's got the potential to break, right? But it has two divergences. It's telling you should break your rules. Come on, Morgan, do it. Do it. Sorry, Steve. Thank you for that. Steve's just showing the large chart and the small chart. He says, check it out, Mark. Odds favorable. Everything says up. Pull back to support inside the triggers. Get paid. Nice. No worries. Kelly, absolutely no worries. Do it at your pace, man. And I think when you don't feel like you have to have it done in a week, it's even easier. And then just a heads up, my direct messages work via Discord. Feel free to use my email. If you can't make it to the class and you're studying and you have a question, don't be afraid to reach out. I'll answer it. Glad to answer it. You're welcome. Great trade. Do you guys see it? Odds favorable, potential to break, no divergence, perfect entry. $280 in 13 seconds. Triple dog dare you to be mad about that. Been some great opportunities in the market today, guys. Been some great opportunities in the market. Holy termination, son of a gun. Sometimes it happens, doesn't it? Sometimes they hit an area and the triggers don't break and it bounces. Sometimes that's it. As my son would say, it do what it be. I like it. And soon the student will be the teacher, Kelly. It's great to have you in here. Snatch the pebble from my hand. There's a couple different ways we could take that one. But I am old and full of useless knowledge. You'll find that. And you get bonus points in my room if you quote Monty Python. All right, I got 34 bodies in this room and every one of them is void of questions. Nobody has anything vexing them. Got someone named Chopper in the room. I like that. Well, European or African? And how would they carry the coconut anyway? I suppose they could grab it by the husk. Oh man, you guys just lost me. 2-ounce swallow carries a 2-pound coconut. Nanda, how we doing? Feeling good? Bob, where you at? You doing okay? I do like the Mel Brooks too. If you're a Mel Brooks fan, go to Netflix and watch the Gene Wilder special. It's awesome. Doing good? I like it. Jonathan 0981, things good. Bob the Builder, any questions? Bob the Builder. That was like parents coming out right there. Studying, ordering trade system this Friday. I like it. New computer? Or, yes, love it. Walter, Kristen, how we doing? Marty, I don't care about you. Miss Clara, how's it going? I'm just kidding, Marty. You're special. Guys, Cam's in here. If you're working with Cam, he's kind of a big deal. People know him. He's got a library with many leather-bound books. Not a trend trade, is it? That's a 50-50 with divergence. You guys want to see how you reverse engineer a trade? Ron says, Mark, check it out. This is a 50-50 with divergence. And divergence kills more 50-50s than it helps. I'm going to take a little run. I'm going to ride that divergence on the good side of the triggers up to the reversal bar marker and see if I can steal a base. When I talk about the whys, when I talk about what I see, I love it because a 50-50 trade isn't high probability. It's lower probability. It's medium probability. Divergence on a 50-50 trade increases the likelihood even more that it's going to go up at least a little bit beyond your entry area. And Ron just 100% capitalized on that. Patterns jump off the screen once you start talking to yourself in terms of advantages, once you know your rules. Patterns begin to jump off the screen at you. Clara, you almost answered. I saw you typing. That's it. Tends to run over the area inside. 50-50s with divergence. Divergence tends to kill your good time. Rod, you found a way to turn that bad time into a good time. Who else is in here? Heard this yesterday at your mom's retirement home. The mind is everything what you think you become. Buddha. Amen. I like Henry Ford's too. Whether you think you can or you can't, you're right. I love that one. I'm a PMA guy. I'm a positive mental attitude guy. I really am. I actually have PMA tattooed on my kneecap. Clara, you're doing great practicing the NASDAQ, but just on sim. Right on. I found, Miss Clara, that NASDAQ's too fast for me off the open. I'm a pretty good chart reader, but it doesn't even give me time to move stops, targets, entries. So when I look at the NASDAQ, I typically look at it pre-market or a little bit after. Another good one, right? Learn your rules like a scholar so you can break them like an artist. And then my latest favorite is one word. And this is it. Where's my picture of it? Maybe that's a good one. The Japanese method for transforming habits one small step at a time. Kaizen is the philosophy that every day you should try to become 1% better. I love that. Yeah, after lunch, like after 11:30 Central, 12:30 Eastern, it changes its entire mood. It really does. It changes everything about the way it behaves. Which is good. All right, it's 10:57 in the a.m., ladies and gentlemen. I'm going to go take a break. I'm going to walk around. Do something, right? Anything other than sit in a chair for 3 hours straight. So when I come back, here's what I need from you. When I come back, I need at least 2 or 3 questions in this room for me to answer, or at least 2 or 3 pictures for me to look at. So if you want to play teacher's helper today, guys, ask me a question. Try to stump me. I don't care. I'll see you in about 5, guys. Talk amongst yourselves. Awesome, Chris. Drop it in there. And you know, since it's slow in here, I'm going to turn it into 72 different lessons. See you guys in a minute. Last hour, all the good stuff. Trend trade short look. So rule number 1, odds favorable. After a good top, triggers stayed below fib. Love it. Caution, 1-to-1s and divergence. But strong triggers break things. I like that you put that, Chris. Well, I'll go back to why I like that. Let's see. Trend trade short per my rules. Missed entry by 1 tick. Rule number 2, lots of room to target. Rule number 3, pull back to mid-band inside of large triggers as a spot. Trade was placed just above and missed it by 1 tick. So Chris, let me ask, and let's go back and talk a little bit. And I was trying to click on your links, which is kind of funny. And let's just go to entry. And guys, this is a great lesson, and this is pretty common. Chris, you expect the mid-band to create a bounce, right? Does everybody get that? So why would you put an entry a tick above instead of catching it on the way? This is what my brother calls tripping over pennies to save a couple dollars. Does that make sense? If that's my bounce spot, man, I want to be in just below it because I hope it doesn't go above it. I hope that's the spot that creates the bounce. So guys, these are the things that are awesome when you post these, because what happens is you have to hear me say, if the mid band is expected to create the bounce, and if strong triggers can break things on the large chart, doesn't it make sense that strong triggers can stop that retracement from being too terribly big? Something to think about. I like it. But I want to talk about this. Caution. 1-to-1s and divergence. Caution. What does that mean? That means Chris knows this isn't the perfect trade. That means Chris knows that there's a potential challenge there, and he gets his management hat on. And Chris, that may be why you put it a tick above instead of below, because you knew that there was trouble in the way. But this is great. Guys, this is why we talk through advantages, because when you know where the problem may be, that's when your management hat comes on. That's where you start doing things. Yeah. Dude, this is the perfect trend trade look. But you don't have a clear path. And that's the challenge, is you don't have a clear path. You're directly into a divergence low. But that's the look. Pull back to the triggers inside, or the mid band inside of triggers. This is the perfect small chart entry look with the imperfect large chart look. But if you go through the advantages, strong top, strong triggers, perfect entry, low risk, one area, right? I might have missed this one because it's into a termination condition. If you were going to take it, it was given to you about as well as you could have ever hoped. So great picture, dude. I like it. And I like the language on the charts. And I think that's the biggest thing for me. It's okay. You learned a lesson on entries is what you did. I'm telling you, that phrase, I hate that phrase, tripped over pennies, because my brother used to say it to me. And there's nothing more frustrating than the market turning 1 tick from the entry point and doing everything it's supposed to do when you know that you should put your entry a couple ticks below it, a couple ticks above it. And now we have weak triggers right at a fib here. It's a great picture, Chris. I'm sorry you didn't get your entry, but it means you know exactly what you're looking at. You know exactly what you're looking for. You know exactly where the entries go. And now you're just working on a little bit of trust. And then Morgan, thank goodness you didn't listen to that little devil on your shoulder, huh? There's so many more. There's so many more. And I think once you realize that, once you start to really believe the idea that the market's going to give you another opportunity, it becomes easier to trade. It becomes easier to follow your rules. Morgan knows the market's going to give him something. He didn't have to break his rules to try to take that long trade. And if he did, he's not going to post it in the room because he knows I'll just rip him up. Not really, Morgan. All right, Miss Jen, let's see what you did. All right, Jen, momentum down. Backup price clears trouble. Did it? Haven't taken many trades this year because you've been lazy. Well, you're getting married now, so you got other stuff on your mind. All right, Jen, you were in at 66.25. It doesn't look like you cleared trouble on your large chart until well below that. I could be mistaken. I could be mistaken, but it doesn't look like you really cleared the fib until about right here. Still a great trade, but I might just be lining it up wrong. Yeah, because there's your circle. There's your entry. They tried to come for you, didn't they? And then just beautiful. Let's get paid at fibs. Sometimes it's hard for me to see because your circle's off a little bit. Your circle's a couple bars back. There's the edge of it, and you've got 5 bars down. So probably lines up perfect. Nice job. Another reason, let it get away from the decision making. Everything says down, go down with it. And you didn't have the greatest momentum, and that's where that little fluctuation came in, right? That's okay. Take your time. I will always wait for you. But because it's not odds favorable, that's where these fluctuations come in. And those are terrifying when you're in a momentum-based trade. But you created some nice expectations, and you nailed it. Absolutely. I love it. Great job. Chris, from what you've seen and per what I just said, on the ES, place the entry below mid-band for short. And on the NASDAQ, which is wild, place the entry at the outer large triggers price. That's your rule, not mine, Chris. You want to know what I say on NASDAQ? I'll share it with you. Let me open up my spreadsheet real quick. So on the NASDAQ's different. The NASDAQ's aggressive. There are two ways to enter the NASDAQ, in my opinion. And Chris, this is based on me blowing out about 15 accounts to learn this lesson. When I get to the area inside of triggers, I ask myself, where are my small triggers? Because remember, Chris, the NASDAQ entry chart is a 13.2, which is the large chart on any other market that we trade. That's how fast and crazy the NASDAQ is. And the NASDAQ tends to overrun. But if the small triggers are less than a full bar away, if my small triggers are on or below the reversal bar, Chris, the reversal bar marker, I don't enter at the area because I refuse to fight these strong triggers against me, these small triggers against me. And you can see on the way down, resistance, resistance. So if I'm at my entry point, I wait. I say I don't want to fight those triggers. And I wait for a close on the correct side of the small triggers to get me to the other side of that momentum. Does that make sense? And then if I get to my area and my small triggers are above the reversal bar marker, they're more than a full bar away, well then I'll enter at the area. Because if those triggers act as resistance, I've got virtually no risk on the trade. But here, these are where I see people get absolutely run over on the NASDAQ. This one is labeled perfect NASDAQ entry. Oh, this was Gino being a rock star. So he's looking for his entry. He doesn't fight the triggers, and he gets in on the correct side of the small. No, that's my picture. Make your own pictures, Chris. Jeez. Just kidding. There you go. There's the first picture. And then if you want, I've got a few examples in here under NASDAQ. Steal those. Correct side of smalls is the next picture. So this is a good NASDAQ one. Price is coming down when it reaches the areas. See how the small triggers are closer than a bar? But once you get in on the correct side, easy money. All the way up. And remember, this assumes that the large chart rules are met, that you have momentum and a clear path. When you get to the areas, the smalls are above, be patient. Wait for the close. Don't do it. Don't hope. We're better than that. That's a momentum trade on the NASDAQ. We're not talking about those. When I get to the areas, the triggers are strong. When I get to the other side of it, the win becomes easy. So Chris, that's a good one if you want to be a NASDAQ trader. Don't fight the small triggers on the NASDAQ. It rarely works out. Oh, look at this. Let it clear. Straight shot. Money, money. Nice job, Marty. Love it. I have such a good time watching you guys get it all worked out, doing your thing. So Chris, yeah, there's about 10 pictures on that spreadsheet under client trades or NASDAQ. Everybody wants to be a NASDAQ trader. Guys, NASDAQ isn't the easiest market to trade. It overruns a lot. Termination conditions work. I feel like you should take less chances on the NASDAQ because it's chew you up, spit you out, but it's fun, right? Marty, it's that redhead you used to date that stabbed you in the thigh with a fork, but you can't help but go back to her. NASDAQ is dangerous. That's based on a true story. See, everybody has that story. NASDAQ is easy on medication. Slows it all down. With enough Robitussin. All right, nothing to do with the NASDAQ here. It's still calculating. But there's kind of an example, Chris. If you were going to take the 50-50, the small triggers were a full bar away, and it gave you a shot to get back to them and manage. And if you tried to fight small triggers thinking that when the 50-50 failed, you'd go long, it came down and gave another before it finally went up. So pretty good lessons there. Let's see this one. At 11:07. And I think this is it right here. So check it out. You get to the area, they're a full bar away. Look how the triggers act as resistance. Isn't that crazy? Tons of time to manage. Tons of time to take quick profits, get to break even at it. And then when it comes back down, it's the close on the correct side that signals the move up. That is about textbook. Why do we go at the area if they're a full bar away? It sucks back to them. You got time to manage. Get to break even. And then if it comes back down, you don't lose anything. Take it again. Because the large chart didn't change. I love that. That's a good lesson there. Thanks, man. Now we're just in a holding pattern. Price reaches support. Large triggers are a full bar away. It's likely to close the gap to those triggers, as it did. What do you guys want to talk about? That's a termination condition. Always, forever. That's a termination condition. Always, forever. And that's not momentum. Did you guys hear Nexgen is going to be starting a funding company? John Novak is recreating Nexgen indicators, trigger lines, mid-bands, channels, divergence, one-to-ones, even market flow in that trading view platform. In case you want to go that direction. My life is about to get super busy, I think. I'm excited. Currently using Apex, Marlon. I like it. I think that what I'm most excited about, guys, when you dedicate every day of the week to helping people find success, I'm super excited that my brother's focus with this funding company is to help people find success. Because the reality is, if you're winning, we're winning. If you're trading well, we're doing well. And it's pretty cool. We are going to be focused heavily on making people successful. And eventually, if you're super successful, one of the parts of funding companies is the funding company follows your trades. So Marlon, if you're winning 80% of the time and making 10 grand a day, I'm gonna copy you. I'm gonna see what you're doing. I'm gonna figure out your plan. And that's what funding companies do. They're looking for the best of the best to create relationships with. It's kind of exciting. So I'm excited. My brother has done well with everything he's ever done in his life. That's just how his brain works. Always watching. My kids say that to me, Morgan. In the voice. In the voice. What do you guys want to talk about? Copy trading is the most amazing part. Just need $50, 10 accounts, filling gaps. Isn't that right? That's one of the things. John told me I might have it today is the Nexgen copier. So one of the things we're doing, and we'll talk about that for a while, is we have a relationship with AMP Futures. And I think this has it right here. And guys, you can have multiple accounts, and there's going to be a trade copier, and you can just go through, and you can literally have a leading account. And you can mirror it on 10 other accounts. It's awesome. How the tail works in real time? Sure, John 20. Let me find a great example of it for you real quick. What is this? This is, okay, so we'll use that circle at 10:06. All right, you ready, John 20? I'm going to take my cheat circles off. So everything, of course, is momentum and path, right? Momentum and path. So what we have right now is momentum and the potential to break. And with that potential to break, guys, we can look for an entry. So this is what it looks like, John. Notice that there's no tail. None whatsoever. It's just a price bar screaming up. That's important. The tails are a study tool. So check this out. When that's screaming up and this is screaming up, this is where we wait for the reversal bar. And this reversal bar happens right at the top of the bar when the rules are met. You with me so far? Once the reversal bar prints, and we're going through entries, from the top of the triggers to the bottom of the triggers, this defines where that retracement's most likely to happen. Everybody with me so far? John, prepare to be amazed. And then we reduce that box to the highest point of support to the lowest point of support inside of triggers. And this is where the market is most likely to bounce. In your entry order, oh, it's not going to let me because the market is trading on the other side. In your entry order goes right here, couple ticks above. Are you with me so far, John 20? Notice that this is still up, right? Still momentum, still potential to break. This market comes down. This is still up. Market comes down. This is still up. Market comes down. Whoops. Hits my entry. This one bar is still doing its thing. This pullback right here that helps us define entry, that's the black part on the large chart. This is the tail. Is this right here? So we can pinpoint, we don't trade the tail, we can pinpoint where the tail is most likely to happen, to end, with areas of support inside of favorable large triggers. But here's the deal. Check this out. Bum, 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 ba-dum, bum, bum. The very top of this bar. Whoa, I did it again. See the line? If price gets back above the top of that bar, you get a tail and an up bar. If price never gets back above to make the next bar, you get one of these bad boys. You get a reversal bar. So what that tail is a full retracement, a bounce off your area inside of favorable large triggers, and continuation with the trend. All of this happens inside of that one bar. You're pinpointing where the tail is most likely to form. Does that make sense? So we don't have to wait for tails, because by the time you know it's going to be a tail, the market's all the way up here. But if you learn that cool rule entry, boom, 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 it works out. It's an X-ray. That's how I like to think about it. It's an X-ray. It dissects. I'm going to keep this picture because this is perfect. This is probably going to find its way into some sort of training material. So by the time the tail forms, the market is gone. But by using, on the smaller, faster chart, areas inside of favorable large triggers, man, fingers got drunk. We can pinpoint where the tail is most likely to form. This is our entry rules being met. You can study the pattern by circling tails and seeing on a small chart where it ends up. And let me do this. By the time the tail forms on the large chart, there we go. So let me give you guys this one. This is a good study picture. This is precisely how you'll study. So you're right. Once the rules are met on the large chart, John 20, this is the part that people forget. Because you hear that tail in the room. This is what that bar looked like before the tail formed. It is a 50-50. Couldn't care less. This is what that bar looks like at the end. This is what it looks like when it's time to go over here. So once this chart, John 20, says, hey, guess what, Mark? You have your rules met. Let's look for an entry. Couldn't care less. I don't search for tails. I don't look for anything. The only thing I look for is an area inside of triggers because that's where the market is most likely to continue with the trend. Great question. I love that. So you can go through and you can use those tails. When you have momentum and path, when you have those two, and these are the ones from the morning, you can just go see where do those tails line up. And not all of them will be a trade. Not every tail that you circle met the rules. Sometimes they pull back to areas in between the triggers. You could find a way to take advantage of that. Sometimes it's perfect. Sometimes it's beautiful. 917. I think I went too far. Story of my life. All right, clearly I'm drunk. Dun, dun, dun. I think I'm on different days. That's okay. Even that tail was a pullback. Crude has been stingy. It is sometimes, right? And some days it's like an ATM. Some days it's like it can't wait to give you money. So there we go again. Did you see what I did, John 20, as I circled the tail? And it came right back to support inside of triggers. And if I move it up to the next tail, it's support inside of triggers. And if I go to the tail previous, right at support inside of triggers. How cool is that? So you can study this pattern without taking a trade. Now I have weak triggers, but I do have a clear path. But I can't seem to find an area inside of triggers. Awesome. Great question. Thank you for asking that one. Guys, this is why I say once you get to the wrong side of the triggers, you don't know where it's going to stop. You don't know if it's going to bounce. You have no idea. Your advantage is gone. And it's okay to sit and do nothing. It's okay to sit on your hands and wait. Wait for the perfect trade. Who said it earlier? It's coming, right? The perfect trade is coming. The best of the best is coming. The highest probability is coming. You just have to wait for it. If you're one of those people that orders your food in a restaurant and 2 minutes later gets pissed off that it's not there, you're going to struggle with trading. But if you go, man, it's coming. Let's hold hands, look into each other's eyes. You're going to do just fine. Gonna do just fine. Do 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 do, mana mana. All right. I'll tell you what, since we have hit a little bit of a slowdown